All right, so guys, welcome to this video. In this video, I'm going to be discussing about one very important question on the mind of every trader. Okay, so every trader, this is the first thing that you have to do when you're looking for trade setups. Okay, now I've received multiple questions on this, and this video right here is my answer to those questions. To those of you who have sent me this message, and I want to use this opportunity to encourage you guys to send more messages, because then that gives me content for the channel, right? So the question here is, how do I know the main direction for price? Okay, so it's expected that you first of all have to find out where price is going before you can jump into trade on the smaller time frame. So you must have heard that we trade on the smaller time frame, the trend of the higher time frames. Okay, and then you might have also heard that the higher time frame is in control of what we see on the smaller time frame, right? And it is very true, because if you are a price action trader relying heavily on price action, then you must learn how to use your higher time frames to find your directional bias. Now, depending on the kind of trader you are, you're going to be using the daily chart, the weekly chart, or the monthly chart. Now, there are times when you can even use the all three of them, right? Like personally, I use the three of them a lot of times, especially when I want to, you know, find a directional bias, like from the long term to the medium term, and just help me to capture a wider price range, right? So I'm just going to be using the daily chart here. So for most of you guys, you are you're day traders, and I'm going to be using the the daily chart here to give us examples on how you can find out the directional bias. Okay, but this also applies. The principles that will be talked about applies also to the weekly and the monthly chart, right? And if you want to do a top-down analysis using the three of them, the monthly, the weekly, and the daily. Okay, so how do I know the main direction of price? We're going to dive right in right now. So we said that you have to find out what the directional bias is on the daily chart. Now, the aim is to find the direction, right? And you can only get to that point where you know what the directional bias is. Now, again, you are not looking to be perfect, all right? Because you can be wrong with the directional bias, but you know what happens when you find your directional bias? It gives you a direction. It makes what you're going to be doing on the lower time frame very clear to you. And that's very important as a trader, so that you're not jumping on at everything that is moving. So you are focused on, the goal, and the goal is trade in line with the directional bias. Okay, and so all you're going to be doing on lower time frames to look for setups to align with what you're expecting to see on the higher time frame, right? Now, the idea here is to find a directional bias, right? But to get to that point, you need to ask yourself certain questions. And the question is, what is price doing, right? Like, where is price coming from, or where is it reacting from? All right. And the structure of the market is going to help you, and the concepts, you know, um, through which you look at the market. So the concept, your understanding of the market, because you see, as traders, we have different ways that we look at the market. Some of you use, your moving averages. Some of you use traditional support and resistance. Some of you rely heavily on Fibonacci's, and so on and so forth. All the indicators, oversold indicators, and there, but your analysis is definitely going to be, drawn, or going to be dependent on the concepts you have about the market. How do you look at the market? How do you interpret price action? Okay, so I'm going to be using the things that I've taught you guys here to talk about our directional bias analysis. So we've talked about liquidity pool and how it can react, price can react from liquidity pools here. We've also talked about market structure. We've talked about we've talked to some extent about imbalance, I think so. But we also talked about order block. So I can remember that very, very clearly. We've talked about order block, and we've also talked about the B2SS to B pattern, right? So all of those concepts, we're going to be looking at that right here, and use that to make sense of what is happening on the hard time frame. And that is where you're going to now draw the information you will be utilizing or using on your lower time frame for trade entries, right? So here's the question, and this video is going to give us the answer, right? So I think I should just move this right here. Let's just keep it down here, right? So this is price right now. And if you look at what price has been doing, this is the daily chart, okay? So we start our analysis on the daily chart. So let's say, for instance, I'm looking to get my directional bias. All right. Now, as I said before, your idea or the concept with which you interpret price action, all right, would determine how you view price and the information you get from price, right? So we relying on those things which we've taught here, but you can substitute these for your own concepts about the market, right? So first of all, when you look down here, what do you see? All right. So you could have been a trader from this low as price travels higher. Okay. You could have been a trader here. Why? Because if you look here, we have a monthly low. This is a double bottom. Okay. But this is a monthly low. All right. Because these lines here, these periodic separators that we have right here on the daily chart means the price action for a month. Okay, so this is the low of this particular month, and that's the high. Now, resting below this low is going to be what? Sell side liquidity. This is what I've taught you guys right here. Now, if we see price deep into that level, which it did right here, and reject from that level, what is it telling us? Well, it is telling us a couple of things. Number one is that the big traders have taken out liquidity right there. But if we want to keep it very simple, it just simply means that price has hit this level and we are rejecting now from that level. That means price is showing an unwillingness to keep on going lower, and it is most likely going to react. But if you look at it from the institutional price action side of things, what it just simply means is that underneath here is going to be liquidity. And then when price trade back down into that level and rejected, it is showing us the unwillingness of price to go lower, yes, but it is also revealing to us the action of the big traders, which means that they have taken out the sell side liquidity that is going to be resting below there. And the next point where they're going to be looking for would be these highs, okay? Or first of all, you're going to be targeting these highs. So when you see the reaction from this price level, that's the liquidity pool, and price begins to reject from there, your eye quickly goes over to this point. Okay, so using the 1 hour chart or the 4 hour chart, I'm not going to say this is the chart you're going to jump into, but personally, I love to use the 1 hour chart. Okay, after doing my analysis on the daily chart, I like to use the 1 hour chart. So for instance, below here, when we see this reaction, I'm going to jump to the 1 hour chart to look for price structure. Now I can sometimes use the 4 hour chart, okay, just to gain some more perspective on the price action. But that's what I prefer. But I'm not saying that's what you should use, okay? But you will just want to go to the lower chart, and what you're looking for mainly is to look at price structure. And with that structure, if you are what is it called now? If you are a support and resistant trader, or depending on whatever you use, guys, it could be moving average or whatever that you use to interpret price action, then you can now determine if price is reversing and the levels where you could start looking for entries or point of interest that you can further refine on a smaller time frame, right? So when we did reject here, now you're gonna be a little bit afraid. Now for those of you who are very new to the concept of institutional pricing or price action. But one thing that I suggest to my people that you can use here would be intermarket relationship. So you're going to look at charts that are closely correlated to this particular chart right here. And that will give you the confidence to want to go along with this kind of trade. So for instance, we've had this level traded into and we've taken out the liquidity. We've already have the reversal. Price is now breaking higher, maybe on the lower time frame. The 4-hour chart, you must have seen, higher highs and higher lows already forming, right? So when you now jump to a chart that is correlated to this one, you can now look at the price action there and say, okay, does this correlate positively? All right, does this correlate to what I'm seeing on the USD card? Because this is the USD card. Now, the card is a commodity-based currency. All right, the Canadian dollar is a commodity-based currency. Now, a chart that you can quickly jump onto to help you confirm what you're seeing right here could be another commodity-based currency against the dollar, like the Australian dollar or the New Zealand dollar. Okay, so the New Zealand dollar versus the US dollar, or the Australian dollar versus the US dollar. That is another chart that you can quickly jump onto to confirm what is happening on this particular price point. So there are times when you can find out that here we made a lower low, but on the other charts we made a higher low. Okay, so that, for instance, is a confirmation. But even if you don't have that, let's say, for instance, the two chart made a lower low, and we started seeing the break higher like this, and it's also happening on the other charts, that can be a sign or an evidence that the price doesn't want to go lower, but then there's strength coming on for the US dollar. Okay, so if you're looking at the Australian dollar USD, then that means that the chart is going to be negatively correlated. Why? Because the US dollar here is the base currency, the first one, while the commodity-based currency, Canadian dollar, here is the quote currency. But if you're looking at Australian dollar USD, the US dollar is the quote currency because it's the second, while the Australian dollar is the base currency. I hope that is clear. That's very simple stuff, right? Now, once you use that to confirm, the price action you're seeing here, then you can now be more confident to take a trade around this level, expecting this high to be taken out or expecting this very short one to be taken out. Okay, or then look for higher objective also if that is the case. Okay, so once you've done that analysis, it now gives you your directional bias for a couple of days, or it could be for one day. But you see, what you now arrive at, let's say, for instance, at this point, this is where you saw price, okay, and then you have this retracement. So around this level, so you have the other chart, for instance, confirming that price is rejecting from this low, dollar is gaining strength, commodity-based currencies are weakening, and blah, 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 all this kind of stuff, right? Now, what happens here is that you're going to be looking for the next level where price is going to trade towards, and oftentimes it's going to be liquidity points, okay? Now, because all the imbalance we have here have been balanced up, all right? Now, we only have imbalance higher, okay? And we don't have more price data here. But the things we're seeing right here would be liquidity pools, this high, and we have this high. So these are the areas where you can now be looking for price to trade into. All right, so you now have this level. So from this point to that point, now assuming all this price action has not yet occurred, from this point, so in fact, let me just play back. Okay, let me just take it back, play back. Okay. So we bring back this price action. Okay, so let's say, for instance, this is where you met price, right? So and you are expecting to see that higher price happening. All right. So let's go to the 1 hour chart and see if we have some break of structure to the upside. This is the 1 hour chart. So we can see right here that we are we already having, this is where we see the rejection. We already have higher highs and higher lows forming. So this was the last low that broke a higher high, that broke a high. And then we had this also happen. All right. So this move right here is what? To take out this low. That's a liquidity grab on a smaller time frame here. Okay. Now, let's say, for instance, we have seen price done this and we are expecting to see higher prices, right? Now, you have now gotten to a point where you now have an unfilled price range. Okay, so from this point where price is to that point, or to that point, but first of all, this high, okay, is an unfilled price range where you expect price to fill up. Now, as long as it will take for price to fill that price range up, you have a directional bias, and that directional bias is bullish. So going into each day, I'm going to be looking for bullish prices until we take out this high. And if we take this out, I'm going to see if prices still showing character and wanting to go higher to take this one out. If we take this one out, if it's still showing character, then we are going to be looking at the next high, which is this one. You see that? But if we have imbalance around here, then that's the next level we're going to be looking at. Those are draws on price based on the institutional concept, right? So we can see, right, how price did take this out. So let's take that back again. See how it played out on the 1 hour chart. So this is that area. So we see price begin to break higher, strong push after taking out this low, right? Coming back down to close the imbalance. So maybe on the 15-minute, you would have seen some other block or the 5-minute chart right there. But I don't want to go over there yet. Okay, so that is price breaking even higher. So the target is actually this high, okay? Because that is what, all right, so this was a quick retest of another block on the 1 hour chart before we took out this high. So this would have been an opportunity to get involved because this was happening during when? What time of the day? London session, which is a good time to trade. Now, all of this other price action we had here was happening at odd hour. For me, I don't like to trade during this time. There are people who do trade during this time, like the Asian session, Sydney session. But personally, I love to trade during the London and the New York session. For me, that is the best times for trading, especially for a currency like a currency that has to do with the US dollar and CAD. Okay. Anyways, so let's take this out of here. So this high now has been taken out. The next thing I'm going to be looking for is price willing to go higher? Now we can see the strong movement of price, and this high now comes in view. We can now expect price to close that up as well. So we have a price range from this point where price is right now to that point. Okay, now we're going to be now looking to see if the structures on the lower time frame do confirm that price will get to that high. And you can see right here, this is an equal high, which is what I teach as one of those liquidity pools you want to think about, you want to look at. And if you go to the daily charts, you see that it's the monthly high also. Okay. So going on, we see market retrace into this high again, this high that was taken out. All right, so a new week opens up. All right, price is trading into what? Other block. These two last down close candle right here is another block. Going to your lower time frame, if we are in the London session or New York session, going to your lower time frame, okay, you could have used that as a level where you expect to see price react from, okay, and then you're gonna qualify this level using the 5-minute or the 4 or the 15-minute. Now, that is what you're now going to be using to find out if you should go long. London session comes on. This is the London session, this green area right here. This green line represents London session. This red line represents New York session. So this green line here, as I start printing, you know that the London session is on. Okay. So London session comes on and we see the big price moves starting to occur, right? That is telling us that price is going higher. All right. A quick rebalance here. Now the next level we're looking for is what? This high. All right. So you can see how you could have used that idea here to find out where price is most likely going to reach for. You see that? Where price is most likely going to reach for. So I'll just replay this. Okay. Okay. Bank. Price take this out. The next level is what? That high. Okay. Now the high is taken out. Okay. Now that the high is taken out, now initially when this high was taken out, you can see price did not retrace back into it. Okay. It didn't give people the chance to get involved in it. Now, when a high, focus very closely, when a turning point, a previous turning point is broken with imbalance, that level is most likely going to act as a resistance or support to price when price comes back in. So for instance, this is a high that was broken with imbalance. When price comes in, it's expected that this price level is going to act as a support for price. So when it comes in again, okay? But you got to look very closely. What do you have right here? This is your order block. So if this level does not act as a support for price, then this is the next level we're going to be looking at. All right. So when you look very closely, what do you see in terms of structure? We've broken highs, right? On this daily chart, we've broken highs. So the next level where we can expect to get involved in price is going to be around this high or this order block. We could have gotten in maybe higher if we see action here, like, the price is telling us it wants to go higher, then you can actually be a buyer to continue higher. All right. But when you see a previous high taken out, this is also a monthly high taken out, and price begins to show weakness, the first thing that should come to your mind is price is most likely going to reverse from here. Why? Because resting above this liquidity point is going to be buy side liquidity. Big traders are going to be selling into that buy side liquidity, which is going to cause a downward pressure in price. Okay, so everything that they've accumulated down here, where are they going to be distributing it? Above the highs. Okay, now with that information, you can also derive a directional bias for your trading on the lower time frame. It's just the same thing that happened at the low right here. We took out the slow, okay? We took out the slow, and then price reversed, which giving us our directional bias that we might most likely see this happen. Now, again, if you are still not confident that you're going to see this reversal happen, right? You can draw confidence from the intermarket relationship. You can draw confidence from the intermarket relationship. So looking at other pairs that are closely correlated to this particular one right here, okay, or whatever pair you're analyzing, okay? So you actually want to see a strong price action here, a reversal that should give you confidence that this price action is actually shifting, okay? So preferably, personally, I'd like to see market break below this low, okay, whatever it is. So even if we're looking at this one, I would have loved to see, for me to start believing that this is going to reverse, I would like to see price break back above into the range, this price range. Okay, now in this case, I would like to see price break below that high again, and then going down to the lower time frame, like the 1 hour or the 4 hour, then I can now confirm that structure, and then using the intermarket relationship, okay, correlated time frames, then I can draw confidence. I hope you're getting me, guys. So this is how you can use the liquidity pools to draw your directional bias. So if we go down to the 1 hour chart, okay, that is the high on the 1 hour chart. Okay, the lines are not here. All right. So, but this is the high. Okay, I'm just gonna drop a line right there. Okay, so that's the area, right? That's the area. Okay. Um, so that's the area right there. So now we want to see price actually drop below that level. Okay, because that's what is going to make sense to me. So we see price still acting as though it's going to continue higher, but never takes out this high, the high of this candle that actually broke past that previous high. Okay, and then it drops. Now, at this point, I would like to see to consult my lower time frame. Now, as you can see right here, what is the structure telling us? All right, what's the structure telling us? So we have a low, and this is kind of an equal low, but I would love to see, um, I'd love to see I mean, this is a low, this is an equal high, okay? If you take the week right here and this week, but if you take the body to body candle, the body to body highs, you see that this is actually a higher high than this one. So the liquidity, the bulk of the liquidity at this high have already been taken out, okay? So this would have been a very quick trade, but that's another case entirely, right? If you see when that actually occurred, it occurred during the New York session, okay, and New York to London session, right? So we saw this breakdown, and then the reversal back into order block. Okay, so if you were anticipating a sell-off, well, that could have been a sign, and then that could have been an entry for you. A very quick one, although it's going to be risky. If you are not looking at the correlated chart, you might not have the confidence to take this one, right? So, but just assuming you skip that one, right? You're just waiting for this previous high, right? This high that was taken out on the daily chart. You're waiting for price to break through that, and you're waiting for this low on the 1 hour chart to also be broken. Now, I would like to see this low also broken. Why? Because look at the strong price movement. This is a strong impulsive leg. Okay, so this level can actually act as an order block, a demand zone, going forward. But if this is broken, then it makes more sense to believe that we might see price, lower prices. Okay, so but let's see what happens in price. We can see price go a little bit higher, and then is breaking down now. Okay, that's an that was London session taking out the high of New York session right here with a very small wick. That by itself is a setup. Something else. All right. So we see a continued breakdown. So finally, this price low has been taken out. Now, yes, that's the reason why I marked this out before. This is what you can call a broken support, right? And it's expected to turn resistance. But the only reason why I can expect this to turn resistance is because it was broken with imbalance. I've taught you guys right here on switch zones. So this was broken with imbalance. So on the norm, I can expect to see price return back to this level and drop from there. Okay, so you can now see that this previous high on the daily charts, which is also seen right there on that chart, has been broken down. We've broken below that level. You see that? We've broken below that level right now. So what are the levels now that we can focus on? What are the levels we can focus on? What do we expect price to reach for? Well, one of them is going to be this old high that was broken here with imbalance. We can expect price to cover up all this imbalance again. Okay, so this is going to be a drawn price as price looks to cover this imbalance. And then we also have this imbalance right here. Okay, now this is a retracement trade. Price is retracing after taking out a liquidity pool, right? And where is it going to be retracing into? Into key levels. The objective or the reason, sorry, the reason for this retracement is going to be to cover up these imbalances and possibly to pick up more orders. So this order block also is in view. Now, if you want to consider using the Fibonacci here, well, you can see, right, that the 50% retracement level is below this high. So we can expect price to drop below that high, okay, based on the Fibonacci. But on a personal term, I would personally look at the 1 hour chart. If I were trading this live, I would look at that 1 hour chart. This is how you actually anticipate price moves, okay? I would look at the 1 hour chart when price gets into this level and then look for opportunities to continue long. Okay, but because we are overall bullish based on the market structure, doesn't mean we can't trade this downwards. Okay, we can actually trade this downwards with the hope that price is going to cover all this imbalance, right? Before we can now change our direction of bias to the higher side. This is the daily chart, guys. So it's going to take maybe 1-2 days for price to cover this up, but there are times when it can be very slow and price can take 4 days. But as long as this range is still open and we still believe that price is going to trade into these levels and cover this all price range, we are going to maintain bearishness on the lower time frame when we're looking for 3 setups. Is that clear enough? Okay. So if you look at the Fibonacci, this is the 50%, the 62% retracement level is right inside the order block. So this is the order block level. Okay. So I think I should take that out. So for those of you who don't know, the Fibonacci can also be used as a implied resistance or support level, but you know, like the 50% on the 60 on the 60 on the 0.618% retracement level can be used as an implied support or resistance level. All right, but I'd like to use them in line with other levels of resistance or support shown as shown in price. Okay, it could be an old high like this. If this high was aligning with the 50% of 61.8, it becomes more meaningful to me. Okay, but if the 61.8 is just on its own, you know, or the 61, yeah, the 61.8 is on, I would not really count that as important. But if it's aligning with other key levels, then it makes more meaning to me. All right, so let's go down to the lower chart again. So this is where we are. And we can expect for price to come back into what? This low. Okay? This low right here. We can expect price to come back into it. And that could be a level where we can now start to look for shorts. And where are we taking, where are we expecting price to reach for? This high that was broken out. So from this point, or this point where price is, because price might not go back to that level where we're looking at on the lower time from that 1 hour chart. But from this point where price is to this previous high that was broken becomes an unfilled price range that we can use as our directional bias on the lower time frame. So we are having the hope that price is going to cover this whole place up. This is an unfilled price range we expect to be filled up. So as long as price is moving towards that level, we are going to be bearish until proven otherwise. And how do we know we've been proven otherwise? We're going to be monitoring the price action on the 1 hour chart. Very, very simple. The 1 hour chart is your highest intraday chart, or you can be looking at things on the intra week, which is the 4 hour chart. But I like the 1 hour chart best. Okay, so monitoring the structure on the 1 hour chart should tell me that we're having you know, problems trading towards this level that we've previously cited or previously come up with. All right, but as price is right now, we are still in a very good shape because price on the 1 hour chart right here is already bearish. Okay, so that is going to be the level where I'm expecting price to reach. So let's just go on. We've done so much talking, but I just needed you to get a clearer understanding of what we're doing, right? Okay, that's price breaking below that low again. Okay, and if you should pull your feed, let's wait for the the retracement to start happening. Okay, so coming into the next day, this is a new day, right? Another thing you got to consider when you're taking trade, and I'm going to mention this later on when we begin to look at how you can take trade, is the fact that you want to monitor time. All right, you want to really, really monitor time. All right, the best time to take a trade would be the London and the New York session, because that's when you have the greatest amount of volume coming into the market, and it's also expected that price is going to be more volatile during these times because of the news that will be released. All right. So for me, that would be the best time for me to try to take entries. Now I don't know for you, but again, um, if you go through price, if you go through historical data, you'll find that most of the times the explosive moves are going to happen during the New York and the London session. So if you take an example, let's just take a little bit quick example here. We can see this explosive move that happened here. This happened during when? The London session going to the New York session. All right. If you go into this day, you find out that this movement here happened during what? The London session to going to New York session. You come here, look at the explosive move that happened here. London going to New York session. London going to New York session. Look at the explosive move also. All right. So if you look at the explosive move that happened in the market, it's most likely going to occur during this time. That's not to say that during the Asian session and the Sydney session, you're not going to have explosive moves, especially when you're looking at the Australian um, pairs, New Zealand pairs, and the Japanese yen pairs. You might most likely come across some explosive move happening during those times, but the London session and New York session is always going to remain the best times to trade because that's when the greatest moves are going to happen, and you also have spread, smaller because of volume, more volume in the market. All right, so if you were to pull your feet from this high to this low, I'm not teaching entry here. But when you look at what has happened, we see that this is a 50% retracement level. Personally, I would look for that to form the high of the next day. Okay, but if we don't see the price action confirming that level, okay, I'm not going to take any trade because it's price action. We expect price action. This is a 1 hour chart. I'm not going to be taking my trade on the 1 hour chart. So that if we see price action on the 15-minute or the 5-minute chart confirming that this area right here, this 50% retracement level, um, is holding during the London or New York section, then I'm going to take a trade. Okay, if the 50-minute or the 5-minute gives me an entry, okay, off of this 1 hour chart or 1 hour key level. Okay, otherwise, this low that was broken would be the level where I'll be looking for the high of this day or a high to form right here where I can now look for trade on the lower time frame like the 15-minute or the 5-minute. Okay, so let's just go further. All right, so we see price continue to trade. Now, lots of people would take that little movement right there as price wanting to go lower, right? Okay. All right. So you can see that 50% retracement level does not hold price at all. Look at how price blew past through that level. Now, I'm not just looking at the 50% retracement level. Remember, I told you guys that I like to look at the Fibonacci levels in line with normal key levels in the market. So there's something that this represents. As a matter of fact, this is an imbalance, a fair value gap. Okay. And I'm expecting that to act as a price, as a resistant level. So going down to the lower time frame, like the 15-minute, if you look at this, this is already the London session. Going to the 15-minute or the 5-minute, I would have expected to see market structure shift to the downside, and then I can now look for key levels or levels on the 5-minute or the 15-minute to take my entry, right? But then none of that happened, right? And we see price trade right into what? What is this, guys? This is the low that was broken here, this key level right here. And this is already deep, a very, very deep retracement level. This is already deep retracement. Okay, so let's go forward. Bang. Look at that. So from that area, even if you were not a trader from that high, because you might not want to take that trade, you might want to wait for price structure on the 15-minute or the 5-minute to confirm to you what you should be doing. And you don't even have to be a trader on this day. But if you find a trade set up on this day, then you might want to take that trade as price trades right back into where? This low. We are going to be targeting this low. So as price is trading towards this low, it doesn't mean we have to hold on to our trade till it gets to that low. I mean to that to this low, to this point, which is this former high. It just means that we already have a price range that is on field and we expect price to fill it up. And as long as price range towards that range and we are profitable, we can be taking profit. We can be taking entries, taking profit, taking entries, taking profit, depending on the kind of trader you are. If you're a short-term trader, well, you might want to hold on to your trade till you get to that point. But if you're a day trader, it's not necessary for you to hold on to your trade to get to that point. As a day trader, the best point where you should be looking to take off your trade after taking an entry here would definitely be this low. Okay, the low of the previous day. It just makes sense for you to expect that this low is going to be taken out. Okay, now after the low, then you cannot be looking for all these levels. If you're a scalper, you don't even need to look for this low to be taken out because you're looking for a very small amount of pips to profit from the price move, right? So let's go down to the lower time frame more and see. So we can now see how price begins to react here. The drop down. All right, so let me just see here. All right, so here, what is already happening? We had a breakdown here, right? So this is the same price action on the 15-minute chart. All right, and if you look at what we already have here, we have another block. We have another block. Okay, now this is already the longer session. If we don't get the retracement, well, it's fine. But this level also could have been traded. It depends on how you analyze the markets. Remember, I told you guys right here about intermarket relationship. Okay, so look at the candlestick right here that just happened. You're already expecting this to play out. This is the 15-minute chart. If this was the 5-minute chart, you could have gotten an entry somewhere around here for the day and target all these lows. This low is going to be liquidity. That's for a day trader or for a scalper. Okay. But like I said, even if you've missed this, you want to look for opportunities to get in line with that directional bias. And how do you do that? You go to your lower time frame and you're looking for your key levels that you could use to take those trades. All right. So looking at the 1 hour chart, let's just go. Let's just continue this. So we have another block here with a fair value gap. We have this higher one. But when you drop down to the 15-minute chart, it becomes more clearer. That's the other block. So going into the next day, it will make sense to expect that that level or this level should act as the high of the next day. Now, I have a student that asked me one time, how do you know the high or the low of the next day? Well, you don't know, right? You just follow price action as it is. So the first thing you want to actually determine is the directional bias, and then you now think of picking the high and the low based on key levels. Okay. So for instance, just like we've done, we've determined the directional bias for this chart right here to be bearish for the meantime. Okay, until we get to that low we saw on the daily chart, right? So we're already bearish. All right. And now we can draw this out and say, let's look at this. So price continue going forward. Price is playing out normally. Price is playing out normally, right? So price is playing out normally. So that's your price. Okay, so this is almost the close of the day. So it's a normal thing for you to have taken out your trade by now. Okay, price attempts to come back to that order block area but fails. Now, you want to look at this candle right here. This is right inside this last upclose candle. Okay, inside the last upclose candle here, before we saw this imbalance, happening. So that is why I did not close all this up. But if you like, you would have closed this all up. But if you want to be more precise, when you look at the way price action, the structure of this candles are, then you're going to be marking this one, which is nested within, because we're actually looking at the origin of the imbalance. That is actually your order block. Just like this right here, you would have been looking at this candle, the last up close candle, because this bearish candle is actually greater, it engulfs the last up close candle, right? So, but then we move forward, right? Let's just move forward. Okay, price keeps on playing, going forward. Okay, we're already inside that level. This is the 15-minute chart. We're already inside that level. Now, you're going to look if this is going to hold, right? You're going to look whether this level is going to hold going into London session. Now, if you are taking a trade here, it's still fine, okay? But personally, I would not be taking a trade here because, again, this is already the heart of Asia, okay? So the spread would be low, but I would not be taking a trade there. I would like to wait for London session to come on. And if this level is holding, I'll go to the 5-minute chart or the 1-minute chart to see if we have a breakdown and then we have a retest of some level. Okay. So we can continue playing this, right? Okay, so price breaks down. Probably on the 15-minute chart, or the 5-minute or the 1-minute, you could have add an entry. Maybe this is an order block level, right? So we see price retesting that level. All right. Just plain price. Okay, we have more breakdown. So you can see how the high of the day, of this day right here, is forming right inside here, right? You can see how the high of the day is forming right inside there, inside the key level. A retest of order block during London session. I hope you've seen that, guys. So this is what I was trying to say, that I personally would have waited for London. If you miss this one out, fine. There's no problem about that. But this gives me even further confirmation. So on the 5-minute chart, well, you could have gotten an entry here, okay? Or you could have gotten an entry here. But if you take an entry here, you are going to put a protected stop loss maybe above the high, right? But this high is also good if you're looking for a very tiny stop, or this high. You can see price never comes back to that level. But the best point would be this high right here. Okay, so personally, I'll put my stop loss above the high. So this is London session already, guys. And now you can see price breaking down and breaking lower. So we have instant rebalancing here, instant rebalancing. Okay, on the 5-minute, you could have gotten another entry here. You could have seen another entry here. You could have seen another entry here. This is another block. Okay, so you can see how you could have gotten in sync with the market. And we drop further, guys. You see that? Now, let me just fast forward this, guys, because it's taking time, right? So this is exactly how you find your directional bias. You can see how price then dropped very significantly. Look at that. Huge drop. So you could have caught in your entry here or here if you already understand what you're looking for. Okay? So with your directional bias, you are very clear on what you are expecting. So we already found out that we want to see bearish prices. Now, with that information, guys, if you want to see bearish prices, then what are you going to be doing on a lower time frame? You're going to be looking for price action to confirm that. Does price action confirm that? On a 1-hour chart, yes, it does. We have a structure shift right here in all these places. And then we can see that we have levels we can look at for right here in all those areas. 5-minute chart, you can further refine these levels, right? And so on and so forth. So let me just accelerate this. This level right here could act as support or this other block. And then what we're trying to do, we're trying to get in sync with all this price move, with the normal bullish structure, okay? We can only have access, we can only have opportunity to trade these bearishness because we understand the price action, how institutional traders actually act in the market. Okay, that's the only thing. That's why I was telling you guys that you can only interpret price action from your understanding of the market. So we understand how to work with liquidity pools, for instance, and that's the only reason why we can use that idea to interpret what is happening on price right here. And then we also understand how to work with imbalance, for instance. Do you get that now? Okay. And then using market structure, you use that to not confirm if all these concepts are actually holding on. Do you get that? Okay, so that leaves you with your directional bias, for instance, if you're looking for directional bias. But if you're looking for entry, you also use the same concepts for entry, right? Okay, so let's just go forward, guys. Just speed this up. So we close into this area for the day. Well, as a day trader, you don't need everything. As a day trader, you could have taken most of your profit at this low. Okay, I mean a scalper rather. As a scalper, you could have taken most of the profit at this low. But as a day trader, you can see the day is very young. You can wait till the London, New York session or the London close. This is the London close right here, where you could have taken all of your trade out. Okay, and then you see New York after London session, because we already have a massive run, and price had already traded into this level right here, okay, which could actually act as a level of support for price. Okay, so we already understand that this could act as a level of support for price. And look at what happened when price traded into that. You had a little bit of rejection. Okay, but if you are expecting that level to act as a level of support for price, you want to actually confirm that on your lower time frame, like the 1 hour chart. I told you guys, personally, I like to jump to the 1 hour chart for confirmations if I'm expecting the daily chart to do a particular thing, right? Now, that level, look at it right here. You can see how price is reacting from that level, but we've not seen any break of structure. There's no break of structure, nothing to actually tell us that price wants to actually go higher from this area. Okay, so let me just make this faster, guys. So going into the next day, we can see price action. Now, let me take this back a bit. So I want you to see the price action that happened the next day, so that you can see that this is not 100% strategy stuff that you can say, okay, this is all that is needed for me to be profitable and everything. You can see what happened here. How that the price broke structure here, broke structure higher, and then reversed back down, took out the lows and reversed back up, but never took out the high. Now you could have been fooled into taking a trade here. Okay, maybe on the lower time frame I might have find an entry, try to find entry here and everything. If price gives me that, then I'll take it. But if price does not give it, because I do my analysis on different levels, different time frames. This is why it's a very good thing for you to do multiple time frame analysis, because it helps you to confirm the price action on the key level on a higher time frame, right? If you're looking at the lower time frame. Okay, so but if I have an entry here, then beautiful. I'd love to take an entry around here, or if I see good price action on 15-minute and a key level, then I'll try to jump on that on the 1 minute or the 5-minute chart, right? But as we can see right here, there's really not much playing out here. Price only came back into fair value gap, and if you pull the Fibonacci from this high, you can see we did not really break any last high that created a lower low. This was the last high that created a lower low. So if you go by that theory, we did not see a break of structure to the upside on the 1 hour chart. So right here, we see the fair value gap. Okay, so I'm going to take this one off. It's a little bit confusing now. Okay, so here we see the fair value gap right here on the low. That will be more evident on the lower time frame. Okay, so this is the 50% retracement level. Price will trace back into the fair value gap, past the 50% retracement level. Look at how price was struggling to close at the 50%. Look at that. Very neat. But I am not just looking at, okay, I think, yeah. So actually price it close above the 50% adjustment level, right? But I'm not just looking at the 50% adjustment level or the 62% adjustment level. I'm looking at all key levels that lines up with the 50% or the 62%. Now I don't need the 62% to line up with those key levels, but the Fibonacci actually helps me to spot the levels that are within a deep retracement that I can consider to be within the levels, the areas of where price has already made a deep pullback, okay, and we might see an exhaustion in price, which is exactly what we did see here. This was all a pullback into this impulse leg. And then the price continued to drop. And then if we see that this level is not holding, okay, on the daily chart, where then are we looking for? We're looking for this order block, right? That's the next level we should be looking for price to get back into. And we are expecting to see a reaction there. Now we acted as though we're going to get into that. This is where you have your liquidity. They are playing that liquidity game again. So they're creating low liquidity right here. Is going to be resting there. What kind of liquidity? Buy side liquidity. Okay. It's going to be resting below that level. I want you to see. So going into the next day, look at what happened. So I'm expecting that level personally to so we have about 3 lows right there, right? So it's looking very, very, very neat. Very, very neat. So it's expected that this low should be taken. But if we have a very strong price action back to the outside, then we would like to see opportunities, see if we can get opportunities to get in. But the best thing would be to see this lows taken out personally. Okay, and dip into the other block we see on the daily. Bang. That's it, guys. It's exactly what you're looking for. You're looking for that. Look at that. We've dipped into that level. And look at how they created those liquidity. One day, this is a daily low, another daily low, another daily low. 3 days in a row, they created a low around that liquidity area. I mean, that order block area. So this area of order block on the daily is revealing where they are actually interested in. So if they're actually interested in this level, it makes sense for them to create this inducement point where they will be induce people short, but also induce people long. They first of all induce people long here, induce people long here. And if they induce them long, they're going to be placing the stop loss where below the low. And if price breaks through that low, you're going to have retail traders trying to trade the breakdown. So they're going to be they induce people long, and then the breakdown induce people short. And all of that is going to be creating the buy side liquidity they're going to be needing here to recapitalize this level. Okay, that's the order block. They want to buy more. So it makes sense, right? This is where one of the people that made a comment on my master pattern. This is exactly how you can find out your master pattern playing out. Look at all of these right here as a consolidation. This whole thing right here could be a consolidation. Look at that. Okay, all of this can be a consolidation. This price move can be a manipulation. Okay, as price manipulates into the hard time frame order block or key level, whatever key level it is. Look at what time is happening, London session. So it's expected that price should move. If price begins to reject from here, if it takes out this low, this high, look at that. We just took out this high. That is a confirmation to you that price wants to go higher. Okay, so look at that right here. Price wants to go higher, haven't taken out this level. So I'm expecting this low to be a protected low. Okay, so if we break down, I could take an entry here personally. There are criteria that can help me to take an entry here, but then my protected stop loss is going to be below that level. But we have another block here. We also have another block here. A move higher back into this little auto block. Another auto block created right there. You see that now? So you could have gotten involved right there. Look at that. Do you see that? This is how you could anticipate your master patterns playing out using multiple time frame analysis, because these are not things that you can just explain in one video. This is what I was trying to explain to, I've forgotten your name. I don't know if you're watching this. Okay, but this is a very good way for you to anticipate the price, the master pattern playing out, predict the lows, and get involved in the market moves. Okay, just one way, right? This is just one way. All right, we continue higher. I mean, this is price retracing back into imbalance. This high also with this imbalance. So I'm just going to take it to the daily chart. So you can see that right at this point, when price did hit this level, your directional bias has shifted. So assuming you were not a buyer on this day when we saw the shift, you could also be a buyer here. But there's absolutely nothing stopping you from being a buyer here if you have all the right ideas, the right concepts, right? So when you're a buyer here, where are you going to be targeting? Well, the first level for me, I'll be looking for price because this is an order block, but I'm looking for price to actually make a higher high. So all of this becomes not too relevant again. So price is going to make a higher high. So this becomes an unfilled price range. Okay, I'm expecting price to cover up. But if you look within here, we have another order block, which is this one. So price might reach that and retrace from there. Okay, that's also possible. But the best level I'm going to be looking for will be this. Okay, but all of these, before price can get to that point, it has already offered me a good amount of pips to take profits, right? I don't even need all of that. I could be a trader on the smallest of time frames, trying to find setup on the lower time frame, and then carve out a very good risk to reward ratio with a very small range. Okay, I already know the directional bias I'm looking for here, or I need here. Okay, and going on to the lower time frame makes my job very easier now. Okay, you see that? Explosive move. Right into the order block and look at the reaction from that order block area. Okay, but that high is a double top, and that would be the best level for. Can you see how it played out, guys? You see how it played out? Well, so the high, this is the double top I'm talking about here, and you can expect for price. Let's just move this above there. Expect for price to reach into that level. Okay, to reach into that level. Okay, would see how price would trade into that level. So you see how you could have gotten your directional bias for this day, this day, this day, and the next day. So you're looking for opportunities to be a buyer, to be a buyer. Look at how price came back down into order block right here, traded back down into imbalance. Well, another block is created here. Okay. Doesn't have to come down there. Okay, we come right into it. All right. This is allowed actually if price, all right, back down into this order block. So we took out this low into this order block level. Okay. So if I still believe, if I still believe, or if you are the one trading it and you still believe that that high is going to be taken out, then you are going to maintain your bullishness. Okay. But if you look at price action here, remember I told you guys that on the daily chart, we're seeing this level as an order block. This level right here is an order block. Okay. So that level is the order block, right? And yes, you can see the reaction of price from that level. So it's expected already that this reaction is going to happen. But if you look here, we also have another level to pay attention to. This is a gap right here. Okay. So they can cover this and go higher, or we can trade back down into this order block. So this is how you can go in and mark out the chart. If you still believe that price is going to go higher, so then you come here and find out when you see this kind of reaction, you're trying to find out where price is going to react from. Okay, so we can see this happen and then price continue higher, or we can see even a total breakdown here. Okay, but I'm expecting these to hold. Okay, so going forward, this is how you do it. You can fail or you can be successful. You can fail in your prediction. You can fail in your analysis. Okay, but you'll find out that by doing this and confirming price action on the lower time frame, in the long run, this is what means success. This is where success actually comes from. Okay, so price comes into the imbalance, like as I was saying, this imbalance right here. We broke through this level, this gap into this imbalance. Now that high, that's it. That high comes in view. That's it. We've taken out the high. So you see how we maintain the bearishness, even though, I mean the bullishness, even though you saw this retracement here, right? The overall directional bias was this. So from this low to the high. So as long as price is here to cover up that range, you understand that you're going to be bullish. And going down to the lower time frame, like your 1 hour, your 15 minute or 5 minute, you're looking for price action that should confirm to you, right, that price is going to move this way for this particular day or this particular week. Okay, so this is it right here. This is a very classic setup, guys. Classic setup. Price came back into an order block, but you can see when this was happening, this was just a manipulation, taking out Asian session lows, and then we had the reversal in London. Beautiful setup, guys. And then price, rallied all the way up into that level we have right there, even passes high, then into that level. So this is how you can find out your directional bias in the lower time frame. I mean the higher time frame, and engage price on the lower time frame to try to profit from that directional bias. So again, you would want to use the lower time frame price action to confirm what you're seeing on the lower time frame. Sorry, I got to say that again. So you want to be using the price action you're seeing on the lower time frame to confirm what you're seeing on the higher time frame. Okay. So for instance, this is the area where we have that order block on the daily chart where we're saying the price is going to find difficulty breaking through. So we're going to see that reaction from price, and that happened, right? So on the lower time frame, we saw a high, a higher high, a breakdown. This is it. Price comes into what? This is the B2S pattern. So price bought to sell here. This low makes sense, right? This is the first reaction point I talked to you guys about, and this is the order block area. So we have this level, price comes into it, act as what? Resistance. It becomes the high of this particular day. If you see a breakdown on the lower time frame like the 5-minute chart, you could have taken that as an opportunity to trade. And going into Friday here, this is the close of this particular week, we see price trading to what? The order block right there, which is the second level I talked to you about. And look at the reaction from it. Okay, but because we are overall bullish and you have seen this price action, okay, you have seen this price action here now, you would not be too comfortable to take this trade because again, we are already in Friday, this close of the week, and you can have profit taking and everything happen. All right. So and then coupled with the price structure we have and the directional bias we have, this is not going to make sense to take. But this one right here could have made sense to take because this price action is still fresh in the memory of the market. We just broke a low, broke it very strongly, and then that low was tested, right? And we now saw a lower low into this imbalance that we do have right here. Okay. So the structure here on the 1 hour chart, together with the other block we saw on the daily chart, which was around here. The other block is actually around here, right? On the daily chart. All of that makes sense to actually now look for this trade and take this trade. But when you look at the overall bias, we are bullish. Okay, and price already in moving in that direction. And we've not yet met the objective, which was mainly this high right here. Okay, so this makes sense to take. This doesn't make sense to take if we're just going by the B2SS to be pattern, but then you also look at the structure, right? So that is it, guys. I want to hear more from you. What are the questions that you have in mind? We can help you to find out what those answers are, and I'll try to put it out in simple layman's language. If need be, I might go into some other concepts, right, that can help you understand that particular thing that is, that you're looking at for the answers for or to, and then I can present it to you in a very easy to understand way. Okay, so give this video thumbs up, share with people because this is one of the biggest questions in the mind of traders. Share it on your social media handles, and I will see you in another video, guys. Cheers and God bless you.